Oh, no, he didn't. Oh, yes, he did. Jerome Powell held a press conference this week sharing his update and changes for the Federal Reserve monetary policy. And there will be many winners from this announcement, and there will be many more losers. I'll tell you who's who and what simple thing that there is for you to do to guarantee that you end up on the winning side. Let's go. Hi, my name is Matt Theriault, CEO of Epic Real Estate, where we show people how to invest in real estate so they can escape the daily grind and retire early. And there might not be a better time in history to pull off this early retirement thing than right now, if you play your cards right. Here's what I mean. The Federal Reserve announced that it's leaving the federal funds rate at essentially zero. And this is exactly what they've been saying that they're going to do for the last year or so until the economy has weathered the impact of COVID-19. So, no real surprises here. Even with the economy seemingly kicking into high gear, thanks to vaccinations and nearly $3 trillion in stimulus so far. However, not everybody is winning. When you consider unemployment at 6%, an uneven household recovery, and more than 2 million fewer Americans in the labor force than there were prior to quarantine. Jerome Powell, chairman of the Fed, said he'd be accommodating those in need with a favorable monetary policy for the foreseeable future. And he's got the pedal to the metal. Now, the central bank is marching in lockstep with the Fed in keeping interest rates low too. The intent of this move is to help those who need it the most. And I really hope it will. But many that don't necessarily need the help are doing better today than they were before the pandemic. So I put together for you a very short list of the winners and the losers, and then I'll give you a simple action plan to keep you out of the losers circle and assure that you join the ranks of the winners. The first group, stock market investors. They are winning, as low interest rates are music to their ears, making stocks more desirable than the dismal rates offered on bonds and fixed income investments such as CDs. The music won't play forever though. We could see serious stock market volatility in the near future when the Fed starts to show the inevitable signs of easing up on bond purchases. But for now, stock market investors are winning. Number two, savers are losing. Low interest rates translate to low returns on money market accounts and CDs. But it's the savings accounts that have largely felt the brunt of lower interest rates. I mean, you remember those emails we all got last March from our banks informing us that they slashed our interest rates? Not that there was much to slash, but they did the best that they could while they proceeded to experience record earnings in 2020. So when you combine that with Powell's desire for higher inflation, it's bad news all around for savers. They are losing, but they don't have to. And I'll let you in on what there is for savers to do in just a second, because at the very least, you deserve to know the rules. Number three, borrowers are winning. Whether it's home equity lines of credit, credit cards, or the United States government, as there's no bigger borrower than them, they're all winning. The cost of a home equity line of credit remains low. The Fed's decision to stay lower for longer means that interest on variable rate credit cards is likely to remain flat too. If your credit cards have fixed rates, the Fed's announcement this week could be a welcome opportunity to find a new credit card with a lower rate. But the borrowers that are really winning, they deserve a category unto themselves. Number four, mortgagors. They are winning big. Those that are borrowing money to buy real estate are really winning. You see, the recent pullback in 10-year Treasury yields means mortgage rates remain in the refinancing zone for procrastinating property owners and adds a boost of buying power for home shoppers in this ultra-competitive real estate market. Here's why mortgagors are winning more than the rest. First, it's real estate. It's produced more wealth than anything else on the planet due to its four profit centers. You got appreciation, amortization, cash flow, and depreciation. Second, with a minimal supply of homes for sale, combined with frenzy-like demand from home buyers, the real estate appreciation profit center jumped 7.3% nationally in 2020, and it's not slowing down. Now, 7.3% isn't much, you may be thinking, because you probably know that the stock market returned just shy of 12% in 2020. But for those that borrowed money to buy their real estate, their leveraged return exceeded 35%, 3 times that of the stock market. So the third reason the mortgagers are winning and winning big, you see, with the Fed pushing inflation, it's these leveraged property owners that stand to win the most, and here's why. Historically speaking, real estate has proved to slightly outpace inflation, unlike your savings account. And as inflation destroys the purchasing power of your dollar, thankfully, it also destroys the debt that you take on to buy your real estate. And it doesn't matter where you borrow the money from either. I mean, it could be from a bank, it could be from a hard money lender, it could be from a friend or a relative, it could be from a credit card, could be from the seller themselves in the way that we teach here at Epic in our REI ACE program. So for the savers and anyone else that wants to win big in this economy, do what the economy is rewarding people to do by borrowing as much fixed long-term debt as possible to purchase cash-producing assets like real estate. Do that, and you will be the beneficiary of and produce wealth faster in this inflationary environment, and ultimately come out a big winner. And sadly, those that don't will lose. The gap between the haves and the have-nots stands to expand over the next several years like we've never seen before. Despite higher taxation, despite redistribution projects, and despite proposed equity programs even. With a total combined $10 trillion of stimulus on the table for 2021 alone, the bottom line, if you want to be a winner through all of this, you'll want to pay as much attention to the value of your dollar as you do your investments. So just to keep all of this really simple, borrow money to buy income property and refi till you die. Real estate works right now more than ever. So what did you find most valuable? Let me know below. And who else do you know that needs to see this? When their name comes to mind, please share it with them. Oh, and if you're already subscribed, I pulled this video out special for you to watch next. Otherwise, I'll see you next time. Thanks for watching. Take care.